Good evening or good morning, good whatever time it is you're listening to this. I'm going to be talking about the datasets, the earnings, and the SPY for March 6th, 2025. And with that said, let's go ahead and jump straight into the earnings. Or not the earnings, datasets. Apologize. Starting with the datasets. Alright, so we have the weekly jobless claims. I'm not really expecting anything crazy. They're expecting a slight uptick in the continued jobless claims, and then a slight downtick in the initial jobless claims. So overall, pretty neutral. Um, if that does have a large uptick or downtick, then the market will react to it. If we get the numbers down a lot, then the market will very likely crash. But if we get those pulling up quite a bit, then the market will probably head upward as that will lead more into the necessity of cutting the interest rates. Also, we have the non-farm productivity. Not really too concerned about that. Um, we have Harker speaking at 8:45 a.m. I don't really care about what Harker says too much, but if he does say something important, then I guess I'll bring it up at the time, but not too concerned about his speech. And then at 1 a.m. or 1 p.m., I'm so off tonight. 1 p.m. we have the Atlanta Fed GDP. That can be pretty massive because the last few GDP expectations have been fairly bad, and that's caused a lot of selling in the market over the last few weeks. That data set can definitely do a number to the market. But with that said, let's quickly go over the earnings. Now, I'm not going to pull up the actual earnings chart because there's really not too much to go over. We have three earnings in the after hours. We have Broadcom, which that can definitely be really huge for the market. We have Costco, which can be somewhat huge for the market. It kind of just depends on how good it does or how bad it does. And then we have a smaller one, but Big Bear AI, which is BBAI. I know many play that one. Again, I'm not gonna really go into the earnings. I'm not gonna be playing any of these three, but I know many do. So if you do, then more power to you. But with that said, let's go ahead and jump into the technical analysis. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. Going over my favorite things, the moving averages. The 5 MA is at the 584.58. And since the market closed at 583.06, it's very likely we're going to see the 5 MA open around the 583.90 mark. Give or take, it'll be in that area. And then we have the 10 MA, which is at 591.92. We have the 20 MA, which is at 599.40. So technically, all of our upper support has pulled underneath the 600 mark finally. I shouldn't say finally. I don't think it's a good thing. Uh, honestly, it's a bad thing. But um, yeah, all the support has finally pulled under the 600 mark. The lower Bollinger's at 578.25. I'm not too concerned with the lower Bollinger, mainly because we've been in that area for quite a while, and it seems to be that the market's wanting to pull away from the lower Bollinger. Now, since we do have the 5 MA, and I'm gonna hide these for a moment, but since we do have the 5 MA opening around the 583.90, give or take that 583.70 to 584-ish area, that means that it gives our low and high range on the day, give or take, if we, use our standard rules of doing a 5 MA test. You should have $1 to $2 above and below the 5 mile, which means we should be seeing the 581 area, and then also we should be seeing the 586.20, give or take. Uh, so with that said, there's quite a lot of room on the day, and with the 586, that put us right in this liquidity area, and the bottom of this is basically 580. So essentially, we can expect that type of move on the day. Um, and this also fits with a couple other structures, but I want to go over the daily ADL. Since I didn't discuss it in my last video, but we're seeing a massive uptick, and just compared to like some of the selling we've seen. So um, the first real major sells, let's see. So we have this one. It stalls out here just a little bit between these 2 days, and then we have a really big downtick this day. Then we pull upward, sell down massively, and now we're slowly pulling back upward towards this this range. Which, that's our 590 range. That would fit really well within the 10 mile area. So if we do have a successful 5 mile test, and just pulling up the mods or the moving averages, whatever you want to call them. I call them the mods. I know people make fun of me about it, but I don't really care. We essentially rejected the 200 mod, which that's a super, super long-term one. Generally, anytime we get to that, it's going to reject, you know, pulled under it slightly there, but pulled right above it right after. There was a long downtrend there, but it's a long-term trend. So if we're gonna pull below it, then expect it to either bounce right back up or to significantly, like, majorly pull below that level, which it can, but we'll discuss that at another time. We're not gonna go over that now. But essentially, we rejected the 200 mod. We're right at the 5 mod again. We didn't test it today, unfortunately. Um, I wish we would have. It would have been great. I expected it, but guess not. So I do expect that to happen tomorrow, which I'm saying tomorrow, but it's actually today for March 6th, Thursday. I'm expecting that to be tested, and with that test, as I said, I expect the lower range of the 581 and the higher range of the 5 or the lower range of the 586 as well. Um, so going over actual just structure here for a moment, and I'm gonna pull up my drawings if I can. Okay, so we bounced off the lower consolidation channel, and just to show you this isn't some arbitrary channel, this has been holding since the election. That's when President Trump was elected, and we broke below that twice in this time. So it's a very strong channel, and very likely due to that, this is very likely going to bounce upward, and we're very likely going to see at least towards the 600 mark again. And the reason why I say that is because we have a couple really nice cups here, and this is the 4-hour chart, but I'm going to go to the 1-hour chart afterward. But we have this really nice cup here, and of course it's going to decide to make my cup wonky, but okay, whatever, wonky cups. That's why I'm going to rename the channel Wonky Cups and Handles. Um, we have the cup top essentially right at that 597 area, which means that we will start forming a bearish structure right up there. Now, going over the 1-hour chart, just to show something else, we have a really nice double bottom. And where is the double bottom located at? Right at the top of the, or right at that bottom consolidation channel. So that means that this has a lot of bounce to it. um, there's a lot of room upward right now, where very likely we're going to see that test between Um, let's see, let's get the actual range in here. So basically about from there to about there, which again, that's right in that area of that liquidity right in there. So following that structure, that's going to play out, meaning we're going to see movement playing throughout there, build upward, very likely, something like that, give or take. And then, Friday, very likely going to head up to the top of that cup. Or, start building, more momentum to the top of that cup. Now, the top of that cup is the 20 ma, and generally after this 5 ma test is either back to the bottom Bollinger or to the 20 ma. Well, it doesn't look very likely we're going to head to the bottom Bollinger. We should hedge for it, but it's not likely we're going back there. Um, I do suggest taking some straddles when we do get to the both the 5 ma and the 20 ma, because what happens at the 20 ma, and I know that might be jumping the gun a little bit, but I'm assuming the 5 ma is going to pass tomorrow, and we're going to head straight up to this area within, the next few trading sessions. So preparing for that, um, we are going to start looking for a bearish structure up in this area. And this is going to happen over the next, I don't know, 1, 2, 3 sessions for this whole thing to play out. Now, granted, we can always have some crazy rejection, have some bad news, and just, pull down from here and retest the bottom Bollinger area, head back down to the lower consolidation channel, and, you know, do this all over again. But I don't think that's likely right now. I think that the market is starting to say that, now it's time to build some liquidity upward. And there's a lot of reasons why we could build liquidity upward and forget just the cup and a handle for a moment. But even the bears will want liquidity upward at this point because if I'm sorry, I'm trying to delete all these really quick, and I want to go to the 4-hour chart. If we are to get some upward momentum here, that's a good thing for the bears because that provides them, a cup and handle. That gives them this 600-ish range to build some more liquidity to pull the market back down and really break through this consolidation channel once and for all if that's the goal for them anyway, right? Very likely what usually happens is the inverse cup fails and then we would see, all-time highs, build into something like that. That's what I'm looking for and anticipating, but we'll go level by level. And for now, the levels are essentially testing the 5 mile range and then seeing if we head to the 20 mile afterwards. So look for the 5 mile to either, successfully go through or to reject. If it rejects, then look for the bottom Bollinger. If it is successful and tests through, then look for this cup right here, the wonkiest cup ever, to fill out, test that 20 mile area, like we mentioned, build some sort of bearish structure. I always use a head and shoulders, but head and shoulders can turn into many different things. That can turn into an inverse cup. Um, an inverse cup and handle gives you plenty of liquidity to head downward. But essentially, what we're looking for is some sort of bearish structure to head downward, head down, very likely in this area. Why? Because there's an absolute boatload of liquidity here. Very likely we're going to form some sort of handle in there. Look for some form of bullish structure, and then, have the major breakout. that's kind of what I'm looking for, and how I project the market is moving from moving average to moving average, or moving average to Bollinger. Very likely we're going to have the 5 mile test be successful, go to the 20 mile, have that be successful or not. Very likely not. Come reject, retest the 5 mile again, and then head upward. Anyway, I'm gonna end the video there. Uh, Tomorrow or today's gonna be a fairly important data day, but most of the really important data comes on Friday. So whatever happens today is very likely just going to be building liquidity for the big move for Friday. And a lot of that data is early in the morning. So, very likely it will be some sort of we built the liquidity in here, start getting to that 586 range, and then, we have the pre-market happen, get the unemployment data or something, and then that takes us, up quite a ways towards the top of this cup. We have the rest of that move play out, and so on and so forth. Anyway, I'm gonna end the video there. I hope everyone has a safe trading day today and a wonderful day in general, and I will talk to you in the next one.